as possible. A couple more late people to the party. This will be recorded, so you have to leave early. You can record it. We're going to record it for you guys, and then you guys can play it back in your own convenience. We apologize for last time. We're going to re-record the one from last time. It didn't record properly. We had problems with our software. So let me just get a couple more of the last people in. Send out one more tweet. So we're going to start. I'm going to give it 2 minutes. I got 3:58 on my clock. I want to start promptly at 4:00 Central Standard Time, 5 o'clock New York. This will be available to be recorded, so you have to leave in 10 minutes, 15 minutes, 20 minutes, no problem. If you get bored and you want to watch at your own convenience, maybe watching some TV, maybe watching the Heat game tonight, you can watch it tonight during the Heat game. I'm starting 1 minute right on time. All right, we're going to get the show on the road. If people filter in, they filter in. This is KeenOnTheMarket.com. Webinar number 2, how to use weekly options to create an income stream. My name is Andrew Keen. I'm an 11-year option market maker and floor veteran. I was on the floor of the CBOE for 11 years. I started my career as a market maker in the GE pit. Then I moved to the Philip Morris pit. And then I was in the Apple pit. When I was in the Apple pit for the span of about 4 years, I was the largest independent Apple trader on the floor in the world. There were larger traders off the floor or the traded group positions, but on my own account independently, I was the biggest Apple on the floor trader in the world. I was trading Apple when it was 80 bucks. I blew out a couple times on earnings, I remember, but you know what? You got to risk money to make money, and that's my philosophy. You got to risk money to make money. So my name is Andrew Keen, like I said, veteran options trader. I was the biggest Apple on the floor trader. Currently, you can probably see me on Bloomberg. I'm on there probably 2 to 4 times a week. CNBC, Fox Business, CBO TV. I'm on the radio as well. Benzinga Radio, Yorba Radio. So I have a media presence. Alex Bernal. He is a CMT. He's a trader and a technical analyst. He's a charted market technician. If you don't know what CMT is, charted market technician. There's only about 50 of them in Illinois. He's read more books on charts than most people have, and more than I have ever in my life. About 400 books on charts. So he is. We've partnered together. We're using option strategies, order flow, and trading to generate trades. We do offer services. We have a live trading room, and I notice a lot of people from the room are in there, and I appreciate all your support. The live trading room is available every single day from around 8 o'clock till 3:30ish sometimes. The room is never closed. We also offer premium subscriptions. We have a trade of the week, daily trading ideas. And we also, if you don't want to pay, no problem. We have a blog, and we have a trade of the day every single day for free. We are not investment advisors. We cannot give advice. I just tell you how I can trade my own money. So there are unique advantages to trading options. Options offer strategic advantages in any market. There's a notable statistic that 60% of the entire life of a stock is spent in consolidation mode or sideways price action. What does this mean? I can use theta, I can sell options, and collect time decay. Options work as similar to insurance on a house does. There's many similarities that I use for options. One of my ways I like to describe options when I'm teaching in the classroom is using time decay, right? So if let's say I own $1 million house, I want insurance on my house. So I pay an insurance company every single month, maybe $1,000 to protect my house. So people use options to protect their long stock position. In general, the mutual funds, the hedge funds, and retail paper bankers are usually long stock. So they use the options to protect their position. I can take advantage of this. Option allows me to structure strategies that put on time decay in my advantage. I can structure a trade based in any situation. If I think the stock market is going to go up but not too much, I could put on a call fly. If I think the stock market is stuck in the range, maybe I'll sell a condor. If I think the market's going to go up but not too much, I could sell a call spread. If I think the market's going to go down but not too much, I can sell a put spread. So taking advantage that other people want to buy these options as protection. Or the best thing about options is I can take an option, buy it for 20 cents, and it can go to $2. A 10% move, 20% move in stock could get a tenfold on an option play. So, buying an option, and I've done this many times, buying an option for $1 and seeing it go to $3 within days is very, very feasible, even with the stock only moving about 7%. So options provide leverage, and it can be used to strategize risk versus reward trades. As I talk about in the live trading room on a daily basis, I talk about risk versus reward. Every single trade, I want to define my risk versus reward. When I was trading on the floor, when I was a market maker, it was way, way different. When I moved upstairs, it changed my game. I had to structure my trades differently. Every trade is a risk versus reward. I try to do a couple things. I say time and target. Where is my time in this trade? Where do I think this trade's going to go? And in what time period? Once I do that, I can look at the risk versus reward. I'm constantly calculating probability in my head on a risk versus reward basis. So let's go over a quick review of theta. Theta is defined as the rate of decline in the value of an option due to the passage of time. Theta generally works against long option positions. So if I'm long options, I'm paying theta. I'm long options, I'm going to be long gamma. I'm going to be short theta. And if you guys are new to trading and don't know this concept yet, you can just think about it. If I buy an option, let's say a call that's out of the money, and if you're taking your experience either in a sim account or in a real account, what happens to the price of that call if the stock does not rally? It just sits there. The stock just sits there. You keep losing money, keep losing money. You keep figuring out, why am I losing money? Well, even if stock goes up a little bit, you could still lose money on this option. Theta generally helps a short option position. In the trading room, I trade every kind of strategy. There's people on TV. A lot of guys on TV are either always long or always short. I alter my strategies on a daily basis. Currently in the SPY and in the stock market, we are making huge volatile moves. So I'm more of a premium buyer right now. I want to be buying options when we're making moves. The S&P 500 futures are moving about 20 points a day. This is higher than the average range. An average range is about 10 to 12 points. So when the stock market's moving more, I want to own options. When the stock market's moving less and it looks like we're stuck in a range, that's when I'm a seller of options. Options in general have rates of decay. The closer they are to expiration, the more they decay, and we can see this very easily. If I'm long a $3 call and I have 120 days left, in theory that's going to decay a lot less than if there's only 10 days left. So the decay, especially during expiration week. Expiration week is one of the hardest things, in my opinion, to trade. I used to think earnings were the hardest thing to trade. I've been trading earnings very, very well. We're going to have a webinar, our fourth webinar actually, will be on earnings and how I'm looking at individual stock to make earnings play. I basically calculate on earnings. This is a little tease for the fourth webinar. I calculate how much it's moved the last 4 quarters and the implied move, and I structure trades around that. But that will be for webinar number 4. At the money, options have the highest time decay. They have the highest amount of premium. So the out of the monies are going to have premium, but the at the monies have the highest premium, highest decay, highest gamma. So the strategy with weekly options. Weekly options only exist for sometimes 8 days, sometimes it's even less. Usually the options get listed on Thursday, so that'd be 7 days. Selling premium strategies can be implemented 52 times a year. And part of the reason that I used to get so frustrated when I was on the trading floor is I was a market maker in Apple. And when people wanted to trade Apple, they would have to trade, let's say June's expired, they would have to trade the July options. So I could control it. I only had to know the price of certain options in July. Well, the CBOE got very, very smart, and the ICE did too, and they realized that there's a product for weekly options. I've heard rumors of the S&P 500 futures actually having daily options now. I don't know how far they're going to take that, but weekly options. And at first, I hated it. I was like, you know, they're killing my product. My product is Apple. If they want to trade Apple, they have to trade it with me. I'm the biggest trader. I want them to trade July with me. I don't want them to trade anything else. But the weekly options represent a great opportunity for traders off the floor and customers. The markets are a lot tighter than they used to be. The markets used to be wider, and you'd have to play something 4 weeks out. Now the markets are tighter, and I can play an event. It gives me a great trade. So it gives option traders the ability to make a very short-term bet on a catalyst or lack thereof a catalyst. You know, if I want to play earnings, and let's say it's Apple, because that's my prime example, then I can do strategies. Hold on, someone asked a question. 40 times a year. They're 52 times a year. Every week is going to have one. So every 2 weeks is going to have one. Well, technically, you know, I consider them weeklies now. The June ones are actually the weeklies now. So they maybe are considered the monthlies, but they're still weekly. Every week I can play it. So I have 52 times to trade options. They expire every single Friday for the whole year. So that would be 52 times. If you want to consider the monthlies still the monthlies, then you're right. It would be 40. So we're going to ask questions at the end. You'll have plenty of time to ask questions. Let's just go over these, these bullet points so I can go through these real quick. So if I want to play an earnings play, there's a lot of, there's still some stocks that don't have weekly options, but the big players in the Apples, the Googles, the SPY, they have weekly options. JP Morgan, Morgan Stanley. There's few disadvantages of weeklies. Short time duration and rapid time decay limits trade repair and strike adjustments. It's very hard to adjust your strike and quarterlies. Yes, there's 4 of them. I traded the June 29th the other day. There's little time to alter a strategy. If I sell a dollar put spread for 35 cents, I'm risking $65 to make $35. Then it gives me very, very little time to alter my strategy. Sometimes, some people like to play, longer time period, more strategy. I like to play the shorter time. I want to know if I'm making money or I'm not. I want the trade to be over. I want to move on to the next trade. Currently, my book is about 60 positions. And most of them expire in June. I have some August. I have some positions to January 2013. But I want to play a certain event. The open interest might be limited at certain strikes and have significantly wider spreads, depending on the stock. A lot of times I put it in the spread book. I put an order in the spread book to either buy or sell a spread. And usually, if the market on the spread is 28 at 40, I can calculate in my head that the fair value is around 34 cents, the midpoint between 28 and 40. If I want to try to put the trade on right away, I can maybe give up a penny edge. And the great thing about these strategies is there's an electronic eye, and some of these big firms such as a Citadel will have something that says if there's theoretical edge, automatically take any trade in the spread book. So I can get filled on this for give a very, very little theoretical edge. So what are my favorite strategies for the weeklies? Condors, call or put flies, call or put spreads. Like I said, every strategy is different. I have to see my time and target. I can structure a strategy to make money if we move up, down a lot, we move nowhere, or we move to a measured move target. Our CMT, Alex Bernal, helps me with my measured move target. And I can also use a theta to my advantage. I can also use it to my disadvantage. If I want to buy premiums, I think there's an event going on, I can do that as well. What's my strategy checklist? How do I decide what strategy I want to put on, what strikes I want to put on, because half the battle is being able to do this. I always say a couple things. Time and target. I always say this is very, very important. I stress this in all my trades. Time and target. I always have to have a time frame. If I'm playing the weeklies, it's got to make a move in this week. You know, I put on some Apple put flies for this week because my time was this week because the WWDC or the WWDC was on Monday. So that was my catalyst. I wanted to play the catalyst. Risk versus reward, and I want to know my break even. So every trade I ever structure, I always want to know three things: my risk, my reward, and my break even. I always have a risk, a reward, and a break even. I always try to prevent blowout risk. What does this mean? This means I never ever sell calls naked. Sell out calls naked, and a lot of people can't even trade that in an account. You can blow out selling calls naked because basically a stock can go to infinity. A $20 stock can gap to $100, $200, and if you're short calls, you know, a lot of clearing firms will not allow this. And I got to always remember, this is from the last webinar, so if you were in the last webinar, paper buying calls is not always bullish, and paper buying puts is not always bearish. Selling puts is the best indicator, and I talk about this. I like to use the unusual option activity to help me with these trades. If I see condors being sold, then I want to sell something as well. If I see strangles being sold, so I use a lot of the order flow combined with my time and target and my risk reward to put a lot of things on. So a quick strategy review. So this is a long condor, and what would I be doing in this strategy? In this strategy, I'm short a put spread, so I'm short a put spread, and I'm short a call spread. This is one of my favorite strategies I like to do. So I make money anywhere with little movement. I sell a put spread, I sell a call spread. If there are dollar strikes, I can do this for maybe 50 cents total. I think this is a great strategy because this is my nectar area. I have the profit on top, I have the loss on the bottom. I sell a put spread, and then I sell a call spread. And what I notice, what I always do is I always have protection. So I know how much I can make, I know how much I can lose. And in this strategy, let's say I sold a call spread and a put spread for 30 cents. I'd be risking $70 to make $30. And depending on how far away, my time and target, I can do this for 50 cents versus 50 cents, 30 cents versus 70 cents. So this is very, very important. This is one of my favorite strategies. And I make money if the stock does not move at all. And to the downside and the upside, if the stock moves, you know, the SPY today looks like it might move. If it goes to 140, 150, I'm stopped out. As you can tell, I'm buying protection on a call, and I'm buying protection on a put. But this is one of my favorite strategies because I'm selling premium. I'm using theta on my side, defining my risk versus reward. And if stock doesn't move, as we talked about, most stocks go sideways over the lifetime of the stock, then I make money on this trade. Another strategy is call or put flies, and this depends on the strategy. You know, sometimes for earnings, I actually want to buy the put fly. So sometimes I want to sell the put fly. So in this strategy, it'd be very, very similar to a condor, but I would be selling, you know, the at the monies. This would be an out of the money call and an out of the money put. This one would be an at the money. If I didn't think the stock was going to move at all, and I thought I was going to say exactly, let's say this is the XYZ. XYZ's $30, and I sold the 30 straddle, and then I bought the 31 calls and at the 29 puts. This would be a long butterfly spread. I make money here, and I'm capped to the upside, and I'm capped to the downside. We have a quick question. This is how do you balance how much premium you're willing to take or risk? Lower credit means higher probability. Where's the balance in minimum credit? It depends on my strategy. It depends what I want to do. I say in general, for a dollar condor, I'm not going to do it for less than 35 cents. So anywhere between 35 and 70 cents. Very, very rarely do I sell a dollar condor for 90 cents because if I'm risking $10 to make 90, most likely that strategy is not going to work. So what I do in these strategies, I try to find bets that I think set up as 50-50, but I think the odds are in my favor more like 60-40. So if I can sell a condor or a butterfly for 50 cents, and I'm risking $50 per one lot, because everybody knows 50 cents is really $50 because it's 100 shares for every option, if I'm risking $50 to make $50, but I really think it's 60-40 in my favor, that's when I want to put on the strategy. If I'm doing a condor for 35 cents, basically I'm laying 2-to-1 odds to someone else. Trading is kind of similar to being a bookie. You have to constantly make probability and risk versus reward plays. If I'm selling a condor for 35 cents, right, I'm risking $65. Let's say it's a dollar condor. I'm selling it for 35 cents or $35. I'm risking 65 to make 35. That's giving another player, someone else that's taking the other side, 2-to-1 odds. Is it worth 2-to-1 odds? If I think it's worth 3-to-1 odds, then I will take the trade. So this is how I do it. Also, I like to do call spreads and put spreads. And in these strategies, I could sell the at-the-money call and buy an out-of-the-money call, whether it be call spreads or put spreads, or I can just do out-of-the-monies. I did one for the blog yesterday as FXE. I sold the weekly 125, 126 call spread for 25 cents, risking $75 to make $25. And today the stock was up, but the call spread was still down. And this is how I use weekly options to generate income. In a call spread, I like these strategies a lot. So in a call spread or in a put spread, I can make money. Let's say I sold an out-of-the-money call spread. And we'll use the example of FXZ, which is the euro. Let's say the stock is 124.25, and I sell the 25.26 call spread for a $25 credit, which means I'd be selling the 125 calls, buying the 126 calls, and I did this for a 25-cent credit to me. I make money if the stock is flat, goes down, or can actually go up, as long as it does not go over 125.25, which would be my break-even spot. So if the stock actually rallies 70 cents, 80 cents, 90 cents, in this strategy, I still make money. And this is how I love to use weekly options. So if I think the stock is going to go lower, stay the same, or move a lot, I can structure a strategy around this. Questions will be afterwards. I just want to give a couple examples real quick. So let's look at the option change for this. This is just selling a weekly call spread, as I just talked about. We're going to use XYZ. We're going to say the stock's $30. I just made up theoretical prices of all the puts, all the calls. My stock outlet is mildly bearish to non-movement. So if I'm mildly bearish to non-movement, I want to be a seller of premium, and I could sell the 30-31 call spread. That means I'm selling for 35 cents total. I'm selling the 30 calls for 70 cents. I'm buying the 31 calls for 35 cents. So that gives me a 35-cent credit to me. I get paid 35 cents. My maximum, the maximum I always want to know, risk versus reward. So the maximum the spread can be worth is $1 minus the price I sold it for, 35 cents. So I'm risking $65. It's very similar to the strategy I just talked about. My reward is the amount I sold it for. I can never make more than that I sold it for. And let me look at my theta effect. Time decays the 30 calls more than the 31 calls. This was saying stock's at $30 right now. So this is saying with the stock at $30 right now. This generally helps my overall my position profitability. I can make money on this trade, and this is why I love the weeklies and I like selling options. I make money if the stock goes down. If the stock goes down to 29, the 30 calls will be worthless. The 31 calls will be worthless. I make money on that because I sold it for 35 cents. It will go to zero. If the stock doesn't move at all, if it stays right at 30, the 30 calls will be at zero or a penny, or the 31 calls will be zero. So I make the 35 cents. Well, what about if it rallies? Let's say XYZ goes to $30.20. Has a nice little rally this week, but doesn't go up too much. At $30.20, the 30 calls would be worth 20 cents. At $30.20, the right to buy the 30 calls would be 20 cents. The right to buy the 31 calls, if the stock was $30.20, would be worthless. So the spread would be worth 20 cents. I sold it for 35. So this is how I would do this strategy. I lose money if the stock rallies over 1%, but I can still make money if the stock goes higher. The stock can actually go up to 30, 34, and I will still make money on the spread. So this is a similar example, and this was the SPY, and I did this for last week's trade. Basically, I thought the SPY was oversold. I sold the 126 puts, I bought the 125 puts, and I did this for 25 cents. I would say in general, on a dollar spread, if it's SPY or FXE, $25 is the lowest I would go. Risking 75 to make 25. If it's anything lower than that, I'm really not comfortable. I don't want to risk $85 to make $15. This is a strategy that I put on. I sold the 126 puts last week. I bought the 125 puts for 25 cents, $25 per one lot. I can trade one lots. I can trade in the sim account. It doesn't really matter. Practice makes perfect. I can put these strategies on every single week, see what makes money. If I'm always doing condos and I'm always losing money, it's not a good strategy. If I'm always selling put spreads and not making money, it's a bad strategy. This one went to zero, so I collected all the premium I sold it for. Let's look at a condor, and the stock outlet is non-movement. So this is the one I have to focus on. Do I think the stock's going to move? Where do I think it's going to move? This right here is my time and target. So this is very, very important. This is something that every individual has to figure out on their own. I always say my time and target. So here's the similar option chain. And let's say in this strategy, I sold the 30 calls, bought the 31 calls for 35 cents. So I sold the 30s, bought the 31s, 70 cents, 35 cents. And I also sold the put spread. I sold the 30 puts, and I bought the 29 puts for 30 cents. Here's just getting these prices off the simple option chain, 70 and 40 here. So I sold, another way of saying this is I bought the 29 puts, I bought the 31 calls, and I sold at the money straddle. So I could look at this as a couple different strategies. I could say I bought a strangle versus selling a straddle, or I could just say I sold the call spread, sold the put spread. And let's say I did this for $65 total. My maximum spread value is $1. If we think about it, wouldn't it be $2 because there's a dollar here and a dollar here? No, because the answer is either the call spread can be worth something or the put spread can be worth something. Then both cannot be worth $1. If the call spread has value, the put spread won't. If the put spread has value, the call spread won't. So my maximum the spread can be worth is $1 minus the price I sold it for, 65 cents. So my total risk is $35. So in this strategy, I'm risking less to make more. Let's look at my reward. The most I can ever make when I do a strategy like this is what I sold it for. So the amount I sold it for, I sold the call spread for a $35 credit. I sold the put spread for a $30 credit. So I can make 65 cents per one lot, which is $65. What's my theta effect? Time decays at the money options more, generally helping the overall position. So in this strategy, I'm selling more premium. So every second, every minute that goes by and the stock does not move, I make money. And I can see this a lot on Fridays. Fridays are the riskiest day, especially during the weekly options. If I do this strategy on a Friday, as it moves away from the strike, it will be more difficult to trade. This moves most and decays the most on Fridays. So on Fridays, if I really want to gamble and I do this structure on a Friday, because I know every minute that goes by, the stock stays at 30. I'm profiting money. But as I always say, no position is a winner or a loser till it's actually closed. So, till 259, the stock could be at $30, and then all of a sudden the stock goes to $33, then I will lose my full value. Let's say how I make money in this strategy. Well, I know that I sold it for $65 or 65 cents, so I'm going to have two break-even points. My break-even point to the upside would be the $30 call plus $65 or 65 cents because I'm collecting 65 cents for the package. So my break-even to the upside would be $30.65. My break-even to the downside would be the 30 minus 65 cents or $29.35. So my break-even points would be $29.35 to $30.65. So in this strategy, I will make money if the stock does not move. If it goes down or up less than 2.2%. So let's say I think the stock market's not going to move that much, but I don't know which direction. This is a non-directional bet. You're just betting on movement. I lose money if the stock rallies or falls over 2.2%. So if the stock rallies or falls more than 2.2%, then I will lose money. And this is a very similar strategy, and we're just putting the chart in here. So if I sold the 130 calls, bought the 131 calls, and I sold the 126 puts, bought the 125 puts, and in this strategy, I would make money anywhere in this range, and let's say I did this for 50 cents. I would make money anywhere in this range. I'm going to have my break even 50 cents higher here, 50 cents lower here. In this whole range, I make money. I like to find ranges where I think the stock is going to end up and make money in there. So let's go over a summary and key takeaways. What if I can't sell options? Well, that's a very good question. Some people can't sell options. Then if I sell options, I have blowout risk. In general, in the live trading room, I sell puts naked sometimes. I never ever, I have before, but I never really try to sell calls naked. Selling calls means blowout risk. I never want to blow out of any position. I don't never wanted to have any position be too big. I talk about a lot that I always try to get my risk, my reward, my break even. Through this, I get my time and target. So I try to never sell options naked. This is blowout risk. I like to use rapid time decay of weekly options for income strategies. So if I think the stock's not going to move much, I can alter a strategy around this. I can think of a trade that I would like to put on for this. I can structure trades for a catalyst or lack of a catalyst. So if a stock has earnings, maybe I want to buy the at-the-money straddle and sell the wings. I do this a lot in stocks like Netflix, GMCR, Google, Apple, when I think they're going to have earnings and the stock's going to make a move. If I think there is a catalyst and I think the implied move is too cheap, maybe I will buy the at-the-money straddle and sell the wings versus the other way around. So I can structure any strategy if I think it's going to go up too much but not enough, down but not too much. The thing is, I have a stop loss because I'm always long the options. I'm never short naked options, and I don't have to worry about a gap risk because I have the protection. In a condor or in a butterfly call spread or a put spread, I always have protection against my trade. I don't have to worry about the gap risk. So I can make money if the stock is up or down. Also options can make money on up a little bit, no movement, down a little bit, or a combination of multiple outcomes. I can also use leverage option strategies to implement higher risk versus reward plays, and I did this in Apple. And anybody that follows me on Twitter should know my Apple trade. In Apple, I thought Apple was going to go up on earnings, but not too much. So I bought a call fly. So I'm not always just selling options and I'm selling premium. I bought a call fly. I thought there was a great opportunity in Apple. So in Apple, I bought a $35 call fly and I paid $5. So I was risking $5 to make $35, and I thought this was a great trade. Great risk versus reward trade. I did this in Netflix as well. Excuse me. I did this in Netflix as well, where I'm risking a very little amount and I could get 7 times my money, 10 times my money. I did one in OVTI in the trading room. I bought a put fly. I took a double on half my position. I still have half left. Joy Global, JOY. I did a put fly in there. If I can buy a 50-cent put fly that can be worth $2.50 on a catalyst, and I think the stock is headed to that strike price, figuring out the strike price where it's headed is very, very important. So if you guys have any questions, shoot away. We're going to take about 10 or 15 minutes for questions. All right, someone has a question. Do I take a loss on the trade if I sell a put spread for 25 cents or cover it at 50, or take the full loss? That's a very good question, and I think the answer is, Alex helps me use a target. A lot of times I sell put spreads, and if it breaks a key level, if it breaks a support, if it breaks a resistance, and I don't think it's going to go back through it to the upside. So in SPPI, I know I sold a put spread, And the second it broke that level, it looks like $11 is the line in the sand in some stock. It goes down to $10.50. If I get a pop back up to $10.80, doesn't see it's going to get above $11, I will often take that trade off. Yes. So not every trade is left on till expiration. I just got to take into consideration my commissions and my structure. But if it breaks a key level on the chart, I think that's very important to take it off. Next question. Call and put flies are actually technically the same. Yes, Joel, that's a good question. However, I want to trade out of the money call and put flies, right? So in Apple, I bought an out of the money call fly, and the markets are just tighter. So if I'm buying in the money options, my markets are going to be wider. It's harder for me to get on trades. So I would, if I'm bullish on a stock, I could do the call fly or the put fly, but I would want to do the out of the monies because those have the tighter markets. If I could share some of my scans, I could probably pull my e-signal right now. Let me pull my e-signal right now. And I do this, and this is something that happens. I do it in live trading room, and I show my example every single day for every single stock or everything I put on. So this is an example in Coors, and in Coors there was earnings. So in Coors, they had earnings. I noticed a strangle getting sold. I noticed paper sell a strangle. So this is a perfect example, and this one's not over yet. And I try to get filled on this position in the book, and I did not get filled as much. And this is a perfect example in Coors, and in the trading room, I put this in for every single trade I make. I saw a strangle getting sold. I wanted to put on a condor. I wanted to sell a call spread, and I wanted to sell a put spread. So in this strategy, I sold the 40 calls, the June 40 calls. I bought the June 41 calls. Also, I sold the June 33 puts, and I bought the 32 puts. I did this for $50 or 50 cents total. So here's my trade. I sold the 40-41 call spread, and I do have this position on right now. And I've sold the 33-32 put spread for 50 cents total. My risk, $50 per one lot. My reward, $50. How does it chart? What notes do I put in? It's bearish. So this is my strategy. And I always put in the break even, 40-50, 32-50. So this is my strategy. Why did I put on this trade? Well, I think it's in a neutral stance, and I saw strangles being sold. So every time in the trading room, anytime I put on a trade, I put in everything that I do. Here's one I put on. Actually, I didn't put this one on, but I put on a similar trade. This was a put fly in SPY. I think SPY is headed lower, but I don't think it's headed too much lower. So I bought the June 133 puts. They expire on Friday. Sold twice as many of the June 130 puts. Bought the 27 puts. And this is good that you asked me to show you a scan because I didn't even have these examples in the slideshow because I actually do them all day long in the trading room. So here's the trade. I bought the June 133 puts. Also bought the June 127 puts. Sold twice as many as the June 130 puts for 95 cents. My risk, $95 per one lot. My reward, $205 per one lot. And my notes, I think this is a good risk versus reward because I think the stock's selling off. Let's try to scan some of these questions. Basically, a long gamma position would be one where I think that the stock is going to move more than the implied move. If I wanted to be a short gamma position, I think it's going to move less. So this is how I structure my strategies. If I think that the stock is going to move less than the movement, I would sell premium, just like I did in Coors. If I think it's going to move more, then I would be buying premium. Do I check out the maximum pain point and play with the weeklies? Yes. I play with the weeklies all the time. So like I said, some stocks don't have weeklies. So I do play with them all the time. How do I go about my stock selection when I'm doing weeklies? Well, some of them I trade every single day. So, I watch SPY, Apple on a daily basis. So I trade those on a daily basis. Other times that we have a proprietary software that we have option flow. We have all the option flow across all the exchanges. In the option flow, we can see trades coming across. So when I see condors getting sold, strangles being sold, I see 2,000, 3,000, 4,000 strangles being sold, then I want to sell a condor. we can get this in PDF? I think the answer is yes. I will talk to my sales team. Esther, if you want to email sales@keenonthemarket.com, they can send you this. So those are some of the scans. Yeah, basically you're right, Joel. Ever used Broken? Yeah, sometimes I sell wings as well to capitalize on it. Someone asked me how long it took me to get my account back. This is how I trade, and this is, I do videos and I do speeches on market psychology and trading psychology. When I'm making money, I want to trade bigger. When I'm losing, I want to trade smaller. There's nothing stupid or wrong about trading in a sim account. It's just like professional baseball, and I use so many analogies in trading. Like think of a professional baseball player. If he's hitting 300, just let him go up there and hit his wedge as much as he wants. He doesn't need a hitting coach. Well, if he slumps, he gets 200, maybe 150. Maybe he should go back to the minors for a little while. Get his groove back on, and then come back. So I try to trade bigger, take bigger positions when I'm making money, just like playing blackjack, just like playing poker. Minimum open interest I have on Interactive Brokers, so I can bring this up right here. And this is another thing I always scan. Actually, the markets are closed, so I can't see it. But as you see right here, OI, open interest. This is Interactive Brokers. I don't get paid if you guys go through Interactive Brokers. You can use them if you want. I have a volume. This says how much is volume is traded in the day. Then I have open interest to see how much contracts is open interest. Yes, I use to see what's getting bought or sold to determine trades. How many stocks do you think a rookie should trade? I know I trade certain stocks better than other ones. I don't think I trade SPY as well as I trade other ones. I know that I trade Apple. You can ask anybody in our trading room that Apple's like one of the best stocks I trade. But I've been trading it for such a long time. When I used to be in the pit, I used to tell everybody that it would take it's a learning curve, learning what happens to the stock in the morning, and if it bounces off support before support, it actually tests to the downside a little bit before it gets a bounce. How the designated primary market maker is going to treat the stock. So there's a learning curve on any stock as well, just like options, just like trading. So there's going to be a learning curve on everything. Maybe I would say 6 different stocks, 4 different stocks. I can't tell you how to trade your money. I trade 60 stocks. When I started on the floor, I think I had 4 stocks. I had GE, I had Kraft, I had Pepsi, and I think I had Humana. So maybe I started with 4 stocks. Someone asked me, do I know at what point a day theta takes effect in the option? Well, in general, what happens around noon, there's no set time. Around noon, Citadel Goldman Sachs rolls their calendar forward, which means they literally take their program, and then you can hit a button that says roll your date forward and move it to tomorrow's date, and it takes a theta out of the trade. So around noon, the theta usually gets taken out. And then usually on Thursdays, if there's a weekend, they start rolling their dates forward for the weekend as well. Yes, I look at implied vol as well. I look at stock historical vol versus implied vol. How do I repair a weekly condor gone bad? If I make a trade and it's gone totally against me, then sometimes I'll just take it off. In the trading room, I always talk about I have no problem admitting when I lose money. And this is an example of a trade, right? In SPPI, I sold some put spreads. Oh, I sold some. This is a different trade. This is from a while ago. But I sold some put spreads on the 12 line. It broke the 12 line. As it bounced back, I got out of it. So I'm always trying to get out of the trade if it breaks a level where I think it's going to break. You can find out information on trading options. You can go to keenonthemarket.com. You're welcome, Esther. Just email sales@keenonthemarket.com. Yeah, I use order flow to look at, in general, everybody's always long. Hedge funds, mutual funds, banks are always long. So just because puts are being bought, and this was our webinar last time that we'll reshoot, just because puts are being bought isn't a bearish position. Just because calls are being bought isn't a bullish position. This was the webinar I talked about last week. Combining that with Alex Bernal, CMT Alex Bernal, as you see these chart guys on TV, unless they say charted market technician, these guys just make up stuff about charts. I mean, they've read them for a while. You know, I could tell if it's in a bear channel. I can bring up the letter X, which I brought today up for the live trading room. Oops, X, not SX. And I can say, look, it's in a bear channel. I mean, I could draw a bear channel too. These are duplicated lines. You know, say if it gets to the top of the bear channel, then I would short it. You know, I could bring up, you know, a 5-year chart or, you know, a monthly chart in the letter X, and, you know, I could say, well, it's at the bottom of it. If it tests this 1580 level, maybe I'll get a double bottom from here. Yes, we run scans. We have proprietary software where I get all the order flow from every exchange. Then I take what I think is the best order flow and I offer it to the trading room. The trading room, you know, obviously has the right to trade however they want. I take certain trades. I don't take certain other trades. They have the right to read the order flow as they like. I'm a seasoned veteran of over 11 years reading order flow. I use Interactive Brokers, yes. Yeah, in general, I don't like to take trades that are that have an. So the first thing I always look at when a trade comes in, what's the volume and what's the open interest. So I look at the volume. If the volume's 3,000, the open interest is 3,000, then I don't make the trade. Right. I want to initiate opening positions only, and this is what I try to generate in the room. Oh, I'm not taking this trade. It's versus open interest. I don't want to take the trade when they're closing the position. And I used to not understand that, and that's, you know, a learning curve too. When I was on the floor at the beginning, I didn't understand when they're closing position. What does that mean? But I want to trade opening positions only. The color in the middle is the Ichimoku cloud. And if you guys if anybody wants a free trial for the live trading room, Alex is on for over an hour every day. He can explain the Ichimoku cloud. This is a proprietary Ichimoku cloud. You can actually get a YouTube video on it, or we can send it to you. It's nothing we created, but we have combined it with the colors. Basically, it's saying it's trending the market. I want to be buying when the trend's up. I want to be selling when the trend's down. It works very, very well on a lot of stocks. So it keeps you with the trend. It always keeps you on the side of what's trending. Instead of just randomly selling or randomly buying, we use this proprietary software, and then we're starting to make our own proprietary signals. So these signals we put in our proprietary that we provide for you in eSignal. My eSignal software is about $400 a month just for my software. It depends if someone you know does an order. For an option, depends on where you go. You know, I would say in Interactive Brokers, I get 70 cents if I take liquidity, and if I'm providing liquidity, I pay 30 cents. So I get a very good rate. I do have a portfolio margin account. Alex uses every indicator you could possibly imagine. If you trade a lot technically, you would absolutely love Alex. You know, if you want a trial too. If you guys want a trial for the live trading room, we're going to offer this only to webinar people. The information is right here. You can either email sales@keenonthemarket.com. The phone number is right here. We have a special going on the webinar right now. We did this last time, and we just had it open for a day. We might expand it for the rest of the week, but there's a special rate going on the live trading room subscriptions right now, just for people that attended the webinar. I'm not going to tweet it out later. I'm not going to go on Twitter and say, hey, you know, here's a special rate, call this number. Just for people for attending the webinar and supporting KeenOnTheMarket.com. I appreciate it. We do have a couple guys in the live trading room that they can make comments. Or I have plenty of people if you guys want, you know, references, or we have testimonials on our website. We can offer you a free live trial. You can call the phone number right now. Also, we do have a special going on the rate. This is a price that you will be locked in forever. We're always making additions to the room. We're always making the room as best as possible. I understand there are a lot of live trading rooms out there. I'm a very competitive person, and my goal is to make our room the best as possible. There's been people in our room that have emailed me suggestions. I read every single email and I take it to heart. I want this room to be the best live trading room possible. The live trading room basically consists of about 6 hours of live talk. I talk for 5 hours a day. I can see you're going to say something too. I talk for 5 hours a day, basically order flow, my opinion on the market, and trades. Every single one of my trades I put in here. And I can give you a slight little example right here. Can I see that or no? So this is today, and I put this in every single day. Today I didn't make many trades. This can go anywhere from 6 to 20 trades. Here's the trades for 6/12. This is all the trades I put in. These are daily trading ideas. So these are not necessarily positions I put in. These are just ideas of trades. What is the trade? What's my risk? What's my reward? What's my notes? Why do I like this trade? What is the chart indicating? So I do this every single day for every trade. When we have earnings on, and I look at earnings every single day, I will trade every single earnings. And the only way to get all my trades, like I said, I can't tell you how to trade your money, but the only way to get all my trades is the live trading room. When we get earnings, and the earnings will kick off for our Cohen at the beginning of July, this will be slammed. It will have 20 trades of every stock that has earnings and how I'm positioning them. What's my risk? What's my reward? What's my break even? Why I like this trade. So if you guys want to call right now, we have a special rate going on. This is going to be it's going to be a price just for webinar people. It's a webinar special going on right now. You will be grandfathered at this price forever. This room will only go up in price. As more people come into the room, I want to make it more exclusive. How do I make it more exclusive? Well, I raise the price. So if you guys want to call right now, if you guys want to call, I can actually show you something too, which you guys are all going to laugh at. This is a list of all my stocks that I have positions on right now. So I have positions, equity option positions in every one of these stocks right now. And to be honest, if you asked me my position, I could tell you exactly what it was to a T and what price I got in it, if I'm making money or if I'm losing money. So these are all my positions. When it comes to this kind of stuff, I am kind of a beast. So we have a special going on right now. You have to call the number right here, 312-265-1436. The price of the room right now will only go up in price. Ooh, excuse me, I'm coughing a lot today. If the phone is busy, you can email sales@keenonthemarket.com. If the phone is busy, you can email sales@keenonthemarket.com. You can just say you went to the webinar and you want the special rate. There's a rate going on right now. If you try to get in Monday, if you try to get in Wednesday, we will not let you in. I'm at the point where I'm finally getting break even, so I do not care. We've been offered, people try to get in the room for a really low rate. I don't care. I don't need people in the room. I want to make this a very elite, exclusive room, and I want people that care. I want people that are going to contribute to the room. I want to make it educational. I want people to learn. I want people to make money. Obviously, I want people to make money. Am I guaranteeing the room is not going to make money? No, I'm not guaranteeing the room is going to make money, but the learning process for trading options is unbelievable. And I know for a fact that I'm one of the best option traders there are. Otherwise, they wouldn't have me on TV. Otherwise, I wouldn't constantly be out there, talking about options, wanting to learn about options from other traders. So if you guys call, if it's busy, please, you have to call the number to get the price. If you guys have any more questions, shoot some more questions. If not, you can call the number here. I am not in charge of the pricing. That's not my forte. My forte is trading. I'm a trader. I'm not a salesperson. I promise you will never talk to me on the phone about pricing because, to be honest, I don't want to deal with that. I want to deal about trading and teaching. I was a market maker for Boda Capital Management. They used to be one of the biggest on the floor. I went to University of Illinois in Champaign. We had a 14-person class. 4 people got a trade. I interviewed with Wolverine, Susquehanna, Third Millennium, and Boda. I went to Boda. When Boda went insolvent, someone named Ed Tilley, who's the second highest person at the SIBO, backed me himself with his own money. And then when he took a position at the SIBO, he couldn't back me anymore. So I know Ed Tilley very well. He's the second highest person at the SIBO. He would vouch for me, but he told me he's not allowed to write testimonials because of the SIBO. And then I have another person who's in the trading room that backed me for a while. And then as I left the floor and didn't want to pay the $8,000 a month, I realized, hey, I can do this from upstairs. And I have to admit, upstairs is a learning curve. When I was on the floor, I was slinging 5,000 options a day. Throughout my lifetime, I can't imagine. I think I calculated one day I traded about 2 million options. So I was slinging 5,000 options a day. Now upstairs, how many options do I trade a day? That's a good question. I don't know. I know in January I traded about 8,000. And that's just, everything is on me. It's all my money. I do trade futures. I do trade options. I do trade equities. I do trade everything. So yesterday, I can bring this up for you guys too if you want to see it. If I can bring my e-signal. So I'm going to show this one real quick. And I did a trade yesterday in the euro. I talked about it in the room. I trade euro on the 5-minute chart. And I got to get it out of the 24-hour because I know it's in the 24-hour. Not oil. Let me get this out of the 24-hour. And like I said, my charting alone is about $400. Oh, that's great. That comes up. Oh, I can bring it up here. Hold on a second. So yesterday, I had see, this is exactly how I traded yesterday. I sold right here in oil, and I got a breakout to the downside. So I sold oil. I took target 1 down here. On a breakout to the cloud to the downside, I took target 2 at, I took a target 2 at 82.69. So I took a breakout of the cloud to the downside. I currently am short the euro. So I trade euro. I trade oil. I trade futures, minis. So currently the 3 products I trade on the future platform is euro. I trade the VIX as well, the VIX, the mini, oil, and the euro. I trade equity options. I trade currency pairs as well. I was short euro, Aussie, and I just covered that one as well. You know what? I went through a very intense program, so it took a very, very long time. There's a lot of simple strategies and there's a lot of complex strategies. I went through a program where basically I had class every single day, mock trading after the close, test once a week. So we took tests once a week. If you didn't get a 90 or above, you basically were out. I had a guy in my class who went to Harvard. That's great and everything, but he never got to trade. Trading is one of these things. You either get it or you don't. And you can go to anything you want. I could go teach for whatever it's called, Options Institute, and make someone pay $10,000. But I promise that if you guys are in the room for 1 month, you will learn, and anybody in my room can attest to it, and they will send testimonials. If you email sales@keenonthemarket.com, and you want a testimonial from someone, I have 12 or 15 people that will be willing to write one. And if you're in the room for 1 month, I suggest 3 months in the trading room. I think in 3 months you will learn a lot of information. We were teaching classes for a while. We tried to record them. The quality wasn't good enough. Everything I do is I try to perfection everything. So I want to perfect those. The quality of the classes wasn't good enough. I'm going to take 1 day, and I'm going to redo all those classes. So it is hard. 10 positions is a lot. When I first started trading, I had 4. And now, I feel like I can take more. And if I'm not making money, then I'll cut back. So, in the trading room, if you want to, 1 month, I would say is the bare minimum. I would say 3 months would be very good. I would say 6 months would probably be perfect. And you will learn more in 1 month. And I have 3 interns for the summer that are all in college. And I said, you know what, this is in a trading position. You guys aren't getting paid, but you will learn more being around me in 1 month than you will at a financial job, probably for a year. Is the knowledge that I can provide. I mean, I'm basically obsessed with the market, CNBC, and Bloomberg. Yeah, it's 95% of option traders blow out in 6 months. And I've been around for 11 years, so that's got to make you think about it. No, not all my positions offset each other. So I'm long some stocks, I'm short others. Some of them are based off charts, some of them are based off unusual option activity, some of them are based off both of them. Yeah, this is what in the notes section. If you guys join the room, we weren't doing this for a while, but I do daily trading ideas, which these are all ideas. So the GDXJ was a Jan position. This was a weekly position. This is July, and this is July as well. So I do provide daily trading ideas, and when the market, today the order flow was very light. Usually this is probably 6 to 8 of them, and my trades is probably 10 to 12. Thanks, Ira. He already promised that he's going to send me with a nice Southern girl if I go to North Carolina. I trade international markets, of course. I trade anything. Today I put on EWP, which is a Spanish ETF. So I have a position on the EWP. I trade FXI, EEM, EWS. I have a position on EWG right now, and EWT, the Taiwan ETF, and the German ETF. I don't trade any of the double or triple shorts or the double or triple longs. I think those are flawed products, and those are the trades that are out to basically get rid of the retail customer. But I do trade everything else. I do trade USO. I trade VIX. Yeah, VIX wasn't in here, so I probably positions more than that. I do agree with you on that, and depending on how much money you would have in an account, you could probably switch to a different brokerage firms. I understand that part of trading is commissions, and I always say that if I'm a beginning trader, I would start in a simulated account. If I felt comfortable and was making money in a simulated account, then I would take a little bit of money into a real account. Once I start making money in a real account, then I can start growing my account. It's just like anything else in life. I would never, if my net worth was $100,000, I would never take $80,000 of my $100,000 and try to trade with it. At $100,000 net worth, start in a sim account, get in the trading room. You will learn so much. There's other trading rooms. No one knows options like me. No one can compete against me. I promise you that. I do trade the TLT. I'm short the TLT 25-24 put spread in the TLT, and they're the weeklies. I put it on for 37 cents. I think it's around 37 cents right now. TLT dipped to 125 and then rallied above it. So I do trade the TLT as well. So like I said, I'm going to be here for about 5 more minutes. It's gone a little bit longer than anticipated, but usually I talk for 5 hours a day, so what's an extra 10 minutes? If you guys want a free trial, or if you guys want the price for the webinar, this is a special webinar price. I don't want you guys to email sales at Keen on the Market on Monday and say, hey, give me the webinar price. It won't be there. I don't want you guys to call and say, hey, I really like the webinar. Now I want to join, because you will not get the price. To be honest, I'm not doing this for money. I'm doing this because I like to educate people, and I want to make this room the best as possible. It took most guys 12 years to make a room that I've done in 6 months. But I will grow this thing to the best trading room. If you guys have been in other trading rooms, 1 month in this trading room, I promise you will learn more than you will learn in a year in those other ones. Because trust me, I've been to every one. I've been to John Carter's room. I've been to Larry Levin's room. I've been to Simpler Options room. I've been to Shine's trading room. To understand and be the best in anything in life, you have to learn from the competition. You take what you think that they're good at, and you make it better. You take what you don't like and get rid of it. It's that simple. Yeah, I think, I would have to see. The way I can market manipulation is very good, because that's a very good question. I talked to my lawyer about this before I put it on. I just have to stay consistency with what I do. So when I put a trade in, I will say, hey, I'm putting this trade in. And a lot of times I don't even get filled on some of my trades, because someone will put in a different price, cheaper or higher. So sometimes I don't even get filled. But as long as I'm consistent, I never buy an option for $1 and have it following where it gets to $1.20 and then I sell it out. I'm not trying to manipulate the markets at all. I think at 10,000 you would have to talk to your brokerage firm, but I don't know if you're allowed to sell options with a $10,000 account. But even starting in a sim account, if you want to learn how to trade, you start in the sim account, you come in the live trading room, and you try. You take, instead of taking that 10,000 you're going to lose trading, you come in the live trading room and you take that money to learn, because you don't want to lose that money. I don't want to lose the money in my account. Right. I make a lot of trades. I have a lot of positions. I have 60 positions on. Stick to what you're comfortable. If you've never heard of a stock, don't trade it. It's not. I haven't heard of some of these stocks before I put them on. I think Interactive Brokers has a good sim account. If you call the number, enjoy the trading room, I will find you the best sim account. Because I'm basically a Google proficient. And we will have another webinar with TheStreet.com within 2 weeks. I do videos for TheStreet.com every single day. I do S&P levels, unusual option activity, and oil and euro videos for TheStreet.com every day. So we're going to be doing a webinar with TheStreet.com. And I think through people in the room have testified my strong point, I think, is earnings plays. So we're going to have a premium webinar, which is going to be earnings plays, right before Alcoa kicks off earnings. I have to get the next exact date. It's right around July. Alcoa July 9th. So we'll have a webinar right before July 9th or July 8th. July 8th. One says the 8th, one says the 9th. We'll have earnings right before. We'll have an earnings premium webinar on earnings and how I'm trading every earnings going into it. Earnings is my specialty. And I wish there was more trades on the trades that I could show you today because earnings is one thing that I like to play. I actually tried to trade Casey today, C-A-S-Y. I tried to sell a call spread in Casey. I tried to sell the 62.5 call spread for $1. It's a $2.5 call spread. I'd be risking $150 per one lot to make $100, and I didn't get filled on it. And I never get aggravated or frustrated if I don't get filled on a trade. If I don't get filled, I don't get filled. But I did try to trade Casey for earnings today, Casey General Store, and the reason I thought I was going to go down, just like Dollar Tree, DG. I made money selling a call spread on that one, so I tried to sell a call spread on this one. But like I said, I'm not in charge of the price. I'm not in charge of what my sales guys can do for you. But you have to call the number 312-265-1436. If you want a free trial for 20 minutes, they'll probably hook you up for a free trial. In 1 month, 3 months, 6 months, a year, if you want to buy a lifetime, I don't know. I'm not in charge of that. I might be able to give you a lifetime. I'm actually bearish to S&P. After the 1349 top in the Globex session on the S&P 500 futures on Sunday, I'm actually bearish it. So I'm actually bearish to S&P. That's why I put on a put fly today. I didn't think it was going to go down too much. I think the rally today was a little overdone. And I talked about in the live trading room, basically for the majority of the last hour and a half, how I thought they were going to manipulate the market and they were going to run them to the highs of the day. And usually what happens on days like today, as days like yesterday, everybody's short because they want to try to fade any rally, right? So they're short. What happens at the end of the day? Well, the risk managers go around to everybody that's short, tap on the shoulder, say, hey, dude, you got to cover this. You can't go home the short. So then what happens when all the short people are buying? They create more buyers. So the sellers now become buyers. So they're selling all the way up, and then they buy at the top of the day. And the buyers just keep buying because they know the sellers have to cover it. And this is how yesterday happened. This is how today happened. Everybody wants to sell every rally, right? Well, I don't want to sell every rally just because it's going up. You have to pick levels. And if I had to pick levels on the S&P, 1341 is important. 1349 is important. I don't think it's going to be able to get through this even 13. Let me bring this up. You can pay for the live trading room with just how much I pay for eSignal. So we have the Fibonacci levels right here. The line in the sand. You could say the high of yesterday maybe was the high. That was 1342. You can pick a lot of different levels. 1349 I got in the Globex session. This double top here at 1333. I do think a rally should get sold. All right, guys, that is all I can do for you today. This went about 28 minutes and 50 seconds longer than I anticipated. But like I said, if you guys want a free trial or you want the discounted price for the webinar special only, if you call on Monday, you'll not get it. Tuesday, Wednesday, Thursday, you'll not get this price. This price is just for webinar people. We do this every so often. Next one for TheStreet.com, I'm probably not going to offer this. but this is a webinar trading room subscription rate. Call right now if the line is busy. Email sales@keenonthemarket.com. And the next topic will be in a couple weeks. You guys have a great night. If you guys want the slides, you can email sales@keenonthemarket.com, and I can give you the slides. But like I said, I would not, there's no reason to trade money. I think you'd rather invest. Would you rather invest $400 in a trading room or $500 in a trading room for 1 month, or would you rather go to an institutional class where it's going to cost you $3,000? And I would never teach at those classes. I've gone to see all their instructors. I don't know any of them. If I don't know them, that means they didn't trade on the floor. They don't know how to trade. So you can go to Option Institute or whatever it's called, or you can go to anything you want and drop $5,000. I had a buddy that dropped $20,000 at Salt Lake City to learn how to trade. I could have taught him that for $2,000 over the course of the 3 or 4 months in the trading room. So call the number. I'm going to cut this off. Thank you guys. And I'm hour and 10. This 4 C's are longer than anticipated. This went like 20 minutes over last ones. But really good participation today. Thanks for helping me out, guys, in the trading room. Thanks for the sponsorship or saying a couple of nice things about me. And if you guys call, my sales guys will be here as long as you call. If you want this webinar price, I'm assuming the best price will be today. Maybe they'll offer you that tomorrow. Maybe they won't. That's their rodeo. That's the name of my rodeo. My rodeo is trading and teaching. All right, guys, have a great night. Thanks for everything.